I don't see a ton of self-storage deals trading. I see a lot more industrial stuff around here. But self-storage is, I mean, we did one self-storage deal, and that, was another asset class that kind of opened up our eyes and learned a ton. I mean, just how to operate those, but learned just how great, and how many systems you can create. You can automate everything in self-storage.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny Cattani, and the founder of Cattani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I'm joined today by Brock Mogensen. Brock has been investing in real estate for over 4 years. He lives and invests in the Milwaukee, Wisconsin market. He holds an MBA and comes from an analytical background. Brock's focus is on underwriting, finding deals, and incorporating data models for asset management. As a principal at Smart Asset Capital, the firm currently has over $20 million in assets under management. Portfolio comprises of multifamily, office, retail, industrial, and self-storage. He's also a co-host of the largest multifamily meetup in Wisconsin, which is the Wisconsin Apartment Investors Meetup. Brock, welcome to the show.
Thanks for having me on.
Yeah, stoked to have you. We, like any true millennial, great millennial story, we met through Instagram and found him on Instagram. You got a nice following on Instagram. What's that been like growing that? I assume just pure organic, right?
Yeah. It's been good. I mean, like you said, it's great for kind of expanding your network and meeting new people and real estate specifically. But yeah, about 3-4 years ago, I was just like, all right, I'm just going to transition my personal Instagram, social media into just real estate, more business focused. So I kind of just took all the content I was posting before and switched it over. Right. And it was, it's been a process. I've been consistently doing it for 3-4 years and just now starting to see kind of a return on all that work and then the connections I've been building because of it. Long way to go still. Like you said, there's so much power in it. It's a tough space, right? Hard to build a name on social media, but I've been putting the time and hopefully we'll see some results.
So you're saying there's no secret to just do it overnight?
Fortunately not, unless you go viral. Some people are going viral on TikTok and stuff, right? that's you could do that. Could get a little lucky.
Yeah, that's true. So take us back a little bit before this then. You've been in the game for 4 years. I'm sure you probably discovered it even before that. What were you doing before and what's led you to where you're at now?
Yeah, so I started kind of how I got into it is, I got out of college, right? Started working corporate job. I was in several different roles at a corporate company, from starting customer service all the way up to marketing, IT. So I got to kind of see a few different roles in a company and kind of grow and see how that works. But a few years in, I decided, I wanted to get into real estate, bought a duplex, did the house hack model, which is a great way to start. And, really quickly realized I was lit. So I had roommates in the lower unit and rented the upper unit. So I was living for free, after all expenses, and was making like $500 a month living in this duplex. I'm like, all right, this is sick. Like, how can I do more of this? I wasn't making a ton of money at my job. So, the path for a lot of people go first is try to flip houses, try to do the wholesaling. Tried that, was out putting signs and lawns, trying to do that thing. And, just didn't really have much luck with it. And during that time, I came across this concept of syndication. I think it was a lot of, I was listening to a ton of Bigger Pockets content. Grant Cardone's content too kind of got me into that mindset of thinking bigger, and syndication kind of clicks with that. So that's where I went from there. Just started learning everything I could about it. Got lucky, partnered with some other people that already had some more experience. A year after I did that first duplex deal, I syndicated an 89 unit deal. And then, went on to do 5-6 more after that. And I was able to leave my job a few years after that to go full-time in real estate. So it's been a good journey. I haven't been doing it for a super long time, but it's been a good, 4 or 5 years that I've been doing it so far.
Nice. That's awesome. I love that you went from 2 to 89 because you just instantly knew the power of the economies of scale, man. Seems like it usually takes a little bit longer, but obviously with your background, you just like, all right, let's take this bigger. And how did you find these partners? Just through meetups or?
Yeah, networking, bigger pockets actually specifically. Connected with one partner, he knew the other partner, us three ultimately came together. But yeah, I mean, just a lot of, getting on there, posting on there, saying, hey, I'm looking to meet people, and grabbing coffee with a ton of people and just talking real estate, going to as much meetups as I'd kind of look for every single meetup within an hour radius where I was living and just go to a few of them a week. I was just all in on like learning as much as I could, networking, and just did that consistently for a year. And I mean, it's crazy how much you just do that for 6 months to a year. You can learn this game pretty quickly.
Absolutely. Yeah, I couldn't agree more. One thing I love too is you have a pretty diversified portfolio. Typically 4 years in, people are still heavy into one particular asset class. What's been kind of the key of diversifying over the 4 years, 5 years?
Yeah, so it's kind of wasn't really necessarily planned, the diversification. So we
as life goes.
Exactly. Yeah. So it ultimately worked out, but we started with multifamily, right? I mean, that was the main thing. I think that's where most people start. We did a deal there, and then all of a sudden we get, an office deal, a strip mall deal, an industrial deal. These deals just start coming up that get sent to us. Some off market, direct owner, some through brokers. But we're looking at the numbers and like, hey, I mean, these numbers work. This is a good deal. The fundamentals are pretty similar. Learning the triple net lease stuff is a little bit different. You kind of have to learn that to truly understand it. But we just did the deals, and they ended up working out really well and providing good returns. So quickly we went from like just knowing multifamily to now we have experience in all these different asset classes. Since then, I've kind of refined and figured out like what asset classes we don't necessarily like. I mean, office, is I think with COVID changed it a lot too, but just not our first choice. Retail, we're pretty selective on. We've done a few more retail deals, but and it's ultimately led us to like today where, self-storage and industrial, we were talking about before this call. I mean, those are the asset classes we want to focus on, where I see the most potential in our market here. And now we have the experience to go out and find those deals. We have experience operating them, and we can double down on those specifically. And maybe that changes 5-10 years from now. And hey, we're back to being heavy on multifamily. We kind of have that wider net now of experience where we can look at, several different asset classes and do those deals.
That's awesome. I love it. And you're in a unique market in that it's not the most heavily sought after market. Pros and cons there, obviously. What's industrial like there? You mentioned offline, there's a few areas where it's just all industrial. What are some of the tenants like, and what seems to flow through there?
Yeah, there's a pretty good mix of tenants in the industrial space here. I mean, Rust Belt, Midwest is known for a lot of industrial activity. So we get, all the way manufacturing, distribution, light manufacturing, kind of across the board. We're not necessarily super niche down into the fact that we're only going to do manufacturing tenants or distribution tenants. We're just kind of in the industrial space. Most of the stuff that we're seeing recently in industrial is our sale leasebacks. That's been a kind of a target of ours to target those deals, because there's been a ton of opportunity where, a business might have built their warehouse, 10, 20 years ago. And now there's just so much appreciation that's happened in the warehouse space. And these tenants they're not in the business of owning real estate. They're in the business of running their company and being profitable. So these brokers are going to these owners of these warehouses, owners of these businesses, and saying, hey, your building is worth, X dollars. Do you want to sell it and take that money and then just lease it back? Get some risk off the table and then inject that capital into your business. It's a great deal for them, right? And then as the buyer, we're saying, well, yeah, I mean, yeah, so we're guaranteed a tenant for usually 5-7 years. And we can get it for generally a little bit more of a preferred price because they're selling it at this rate. And we come in and buy it. So it's kind of, that's been a common transaction that I've been seeing more of in the past few years. I think probably a lot of people in this space have seen that more. But it's a good choice of ours and kind of what we're targeting in the industrial space.
That's awesome. That's incredible. Wow. I love hearing very creative things like that, because I imagine these business owners probably had no idea. Like you said, they're not real estate people. So really had no idea this was even an option. And then it's, win-win for everyone, really.
Exactly. It's a good deal.
That's awesome. And so, you're analytical. What are you seeing economically? Anything changing already for you guys? Obviously, interest rates going up, but anything changing in your market specifically?
I mean, I don't think I haven't seen a ton of change so far. I mean, it seems like pricing starting to adjust slowly. I don't necessarily see it's changed, as much as the interest rates have changed yet, that compression's changed, but just in underwriting, just being extra conservative on all fronts. I think the big thing right now is interest rates, right? I mean, that's the scariest part. Seems like they're going up every single day. A bunch of Fed news is saying they're just going to keep going up, maybe 100 basis points next month. So it's hard to, when you're underwriting a deal and today, and you don't know if you're going to lock that deal up 3 weeks from now, by the time contract gets negotiated and everything. It's a little hard right now, and just being extra conservative and throwing an extra 50 basis points, 100 basis points in our interest rate assumptions has been what we're doing. And also just on the refinance interest rate as well. That's, not to get too deep in the weeds there, but it's a scary part is 5 years from now. I mean, our interest rate's going to be at 15%.
Yeah.
And you're underwriting a 5% interest rate. And if that happens, like it's not going to be a good day. So I think there's a lot of operators that might have done that and assumed a 4 or 5% interest rate, a few years from now. So, I don't know. It's that part scares me a little bit, and just being conservative there. But other than that, still making offers and still, going out looking for deals.
Nice. Yeah. It is interesting obviously we have no idea, right? But kind of just, if it's anything like what's happening now, the Fed is just cranking it up. Some economists are like, we need to raise interest rates higher than inflation to just absolutely bring it to a halt. If that's the case, then a 15% interest rate in 5 years is really not that far-fetched of a possibility, and I'm sure you're like me, obviously pay close attention. I really think there's going to be a slow unwinding of not distressed assets in the sense they were poor managed, but just in that even the most conservative of operators didn't foresee, these gnarly rate hikes, and there's going to be some assets that, some assumptions, I think.
Totally agree. I totally agree.
Yeah, it's fascinating to see, but I love that you guys are still doing deals. You mentioned obviously industrial. What's self-storage like around there as well?
That's another, just great asset class. It seems like I don't see a ton of self-storage deals trading. I see a lot more industrial stuff around here. But self-storage is, we did one self-storage deal, and that, was another asset class that kind of opened up our eyes and learned a ton. Just how to operate those, but learned just how great, and how many systems you can create. You can automate everything in self-storage. We bought this facility that was, previous owner was pretty much just running it off a spreadsheet. He had one spreadsheet. That was the whole facility. Forwarded me the spreadsheet and all right, figure it out. It's all right. There's a ton of work. So we had to get, calling these tenants, getting them switched over to our property management software, got them all set up on auto pay. This tenant has a side deal that he's only paying $10 a month, and this one's been paying in cash for 10 years. So it's a ton of work, but we saw that and we're like, all right, here's an opportunity. So got them all on this, property management software. Now we have a virtual assistant that manages everything, deals with, any tenant stuff that comes through and funnels any work orders through to our property management company. So long process. It took us over a year to do it, but now that we've learned it and figured out how we can automate these facilities, gets us really excited to go out and try to find more. So we're trying to find more of those too.
Absolutely. I love it. That model. And so does the property management, do they provide like a boots on the ground? Is there someone on site, or what does that look like?
So for this one, it's a smaller facility. And so our property management, actually, we're vertically integrated. We have in-house property management. So that one doesn't have an on-site facility person. It's just not quite large. That would be ideally be a little bit larger, where we could have one full-time on site that could supplement with the VA to do stuff. So this one's a little bit smaller. So it's whenever maintenance stuff comes in, we'd have to send a tech out there to do the work orders. I'm
such a huge fan of fully automated, and obviously there are certain facilities, right? Some of these big, of course, like a, large class, even a large class B, class A, you'll probably want full-time staff, but these smaller, like class C, even B minus, if you're, I think even under probably like, maybe 30,000 rentable square feet, maybe up to 50. You don't need anyone on site. You can automate the whole thing. You get your lights, your cameras, obviously make sure it's safe. And then like you guys, either have a liaison who's in town, or I love the VA. Did you have to train the VA? Does the property management company do all that?
No. So the VA stuff was me. We have a virtual assistant that the training, it's not necessarily easy just to, so someone that's never even seen the facility, what to do and how to run it. So that was definitely, took some time to learn that and how this new property management software works. And so there's a big learning curve. Like I said, it took us, we just got to this point now where it's like automated. We bought about a year and a half ago. So it's been a process. But now that I kind of have the template, it's like, all right, now we can just copy and paste this and do a different facility and do it much quicker and more efficiently.
What was the tenant drop off, if any, like 3-5% less?
Like pretty much nothing. That was another, this deal was like a no brainer. I mean, it was literally the marketing for the self-storage units was, he had a sign out front of the building, little picket sign in the ground. That was his marketing. So I was like, we threw it up, online, and we had that facility from 50% occupancy to 100%. And I think it was a month and a half.
Wow.
So it was, we just filling it up. Now there's a wait list for everything. I mean, so it was a good deal. Those are the kind of deals that people are trying to find, those value add deals and those opportunities, and generally require a ton of work. It's not going to be easy just to do all that. So, but when you see a deal like that, it's like, all right, pounce on and spend the time digging into it.
What percentage did you just immediately raise rates to? Like how far below market were they?
They're pretty below market. So we slowly, our approach with increasing rents generally, on any deal is we're more slowly increase rents. We like to kind of maintain occupancy. So we slowly increased them over like 6 months and brought everyone to market. Didn't do that on day one. We wanted to kind of make sure we're full first. So did that over a longer period of time, but it's nice in self-storage because you can just click a button and, increase someone's rent by $20 and it automatically sends a message saying, hey, your rent's going to be increased next month. And it's pretty easy to do that compared to apartments where it's a little bit longer of a process. Totally.
Yeah. It's fascinating, but people still aren't, not everybody's seeing, more people getting into self-storage, but still not seeing the power that's right here. And the fact that, like you said, click a button, it's not unheard of to go in and bring them up to market rate right from the start. Even increasing street rates, at least right from the beginning, so everybody knew is at market. It just really allows you to do some more things, and you're not dealing with the place people live. Have you had to deal with any evictions or auctions yet?
Yeah, we did 2 auctions, and that was a big learning process. I didn't know anything about it. So I'm like Googling, how do I do this? I think I actually even bought a lock cutter and went out there and tried doing it, learned that doesn't work. You got to hire someone to come out there and do that. So, I mean, yeah, just learned so much stuff. I mean, we kind of went into it, not really knowing much about how it works, but, read a few books and did that, but just learned, as we did it, it's worked out. And now we feel like we have a decent amount of experience in that space.
1,000%. I mean, listen, you can read as many, but until you go out and do it, that's how you learn, and you make mistakes and you're like, cool, I know not to take a lot bolt cutters out there now. We just call someone to do it. So
exactly.
Nice. And so it sounds like you guys are probably fully sold on this asset class now.
Absolutely. Yeah. I mean, anything, it's definitely searching hard for more self-storage stuff.
Nice. And this was there any expansion? Do you have to make any changes to the facility itself physically?
We're doing some like capital improvements, landscaping, some new fencing. We converted one of the buildings into boat and RV storage. There's like one kind of larger warehouse style space that we sectioned off into spots, and then we converted that to boat RV storage. That was another thing. Ton of demand. I mean, obviously, I think everyone knows over COVID, the outdoor space, boats, RVs, all those sort of recreational vehicles. Everyone wants to get out and be outside. So, and around here, boating's huge. So a lot of people have boats, and we capitalized on that, and we're able to charge premiums on those spots too.
Nice. I love it. So, obviously great asset. What's the future hold for you guys? What's your plan kind of moving forward? Obviously economy is changing a bit. So what do you guys got going for the next year or two?
Just continuing to, continuing to do larger and larger deals has been a focus of ours. We started in this space, we've done some smaller deals just kind of get us going and get a track record. We sold, we sold 2 of our deals over the last month. So now we kind of have some full cycle experience that's helped bring a deal from point A to point B. So now it's just really focusing on, we kind of took a step back and like focusing really on like our professional branding, redid our website, putting a lot of time into that to kind of just create more of the professional image. But now, and just continue to look for bigger deals, nicer quality deals where we're able to raise capital from more sophisticated investors at larger dollar amounts. That's kind of our goal over the next year or two, is just to continue to focus on that and just doing quality deals that are going to provide consistent returns.
Sick. I love it. That's awesome. Good for you guys. Great to see. Love seeing this generation get in the bag in real estate.
Absolutely, man. It's fun. I have a blast with it.
Yeah, I see you out just doing your thing too. Obviously, you've created some balance for yourself. What's a typical day-to-day look like for you during the week, like during the work week?
It's a good question. I mean, it was a huge, going from, having to be up at a certain time and be at the office by a certain time, and not really have time for myself. I mean, it was a huge switch. Definitely took the first couple months. I was like lost, like, I don't know how to do structure on my own. Like I'm used to like someone telling me what to do and like scheduling meetings. And so there was a little bit of a learning curve, but I think like now it's like, I feel like, it's great. I mean, the benefits of just being able to create your own schedule is amazing. I mean, I'm able to, have my long morning routine and kind of get going and head into the day with some higher energy, be able to just randomly, if I want to go take a day or two off, doesn't have to get approved by anyone. I mean, I just do it. Want to go golf? It's, obviously there's still a ton of working a lot and there's obligations, but it's having that flexibility to say, hey, today I'm doing this is awesome. I mean, I love it. It's a huge benefit.
Awesome, man. I love that. Keep going. Great to see. I mean, yeah, like I said, I love seeing this generation really see the power of it. And man, being an entrepreneur, it's like you said, it's a lot of work. And it's funny because I feel like so many people see social media, right? And, you're out doing your thing, but they don't see those long hours that, you're not really posting on social media when you're just grinding. So by no means is it a walk in the park, right? You're 4 years in and really hitting your stride is what it seems like.
Totally. Yeah. I mean, it's constantly learning, and, you're going to make mistakes and learn from them and learn new things, but it's been good. I mean, being full-time, really, I mean, it's been about a year and a half now I've been full-time, and it's a big difference. I mean, I think it's hard to go full-time and do it right away. Right. I mean, I think a lot of people want to just go quit their job and go full-time. And some people have it like that and are able to. But I think realistically you gotta grind, do it on the side for a few years and build it up, and then still take somewhat of a risk. You're not guaranteed anything being an entrepreneur. I mean, the income can stop. You don't have a biweekly paycheck. So it's scary at first, but then once you get it to a point where it's, sustainable and healthy, it's amazing. You can't beat it.
I love it. And are you doing some passive investing as well, or just investing in your own deals for now?
I've done a few, invested as an LP in a few deals. And, continuing to look at some deals that if I like a deal and I have some extra cash sitting there, it's like, might as well. I believe in the concept. So done it a few times. Most of my capital is just going into, taking larger positions in the deals we're doing. We always invest on the LP side as well on our syndicated deals. So that's where most of my capital goes. And there, I play around with, a little bit of gambling or stock market crypto slash.
I mean, of course you have to. There's got to be
Yeah.
speculation in there.
So yeah, I mean, kind of just continuing to just put some money into different places is always good to me.
I love it. And we talked before, you're turning around now. Obviously, like we mentioned, you're really hitting your stride. You've learned a lot. You're now turning around and teaching what you've learned. Is that right?
Yeah. So I it started with like building my own underwriting model. I mean, I just decided over COVID, I had some extra time, and why not just build my own model? A couple $100 later, I got done with it. And
Casually.
It was, yeah, I mean, not crazy how much time you can spend in Excel, but yeah, so I built the course around that and I had some people asking how they could get into syndication. And after just mentoring a few people, I was like, I'm just going to build a course around it. So that's what I did, and launching that soon too.
Nice. That's awesome. Cool. Well, as we wind down here, I got 5 questions we asked all the guests, the final 5. First question, best advice you gotten from a mentor?
Ooh, I would say thinking bigger. Just from the get-go, I mean, just have bigger thoughts and goals, and set those early on and work towards them. And you'll just be amazed at how quick you can get there when you think bigger.
I love it. What is it about your career that makes you feel like you're fulfilling your why?
Having the opportunity to, do what I want with my life, having unlimited income potential, right? And being able to set goals of what, I have different philanthropic goals I want to do in the future, and knowing that I can get there and with no ceiling on what I can make. I mean, that's big.
I love it. Favorite non-real estate or investment related book?
Oh, I like, I mentioned early on, 10X Rule by Grant Cardone. That goes hand in hand with just thinking big.
Yep. I started my year with that book and I was like, okay, here we go.
Oh yeah. It'll get you going.
It'll get you going, man, for sure. Yeah. Uncle G. If you could have any superpower, what would it be?
Oh, to fly.
You got it.
Wherever I want. Yeah.
Absolutely. Cool. Last one. Best way for people to get a hold of you and learn more.
Yeah. So Instagram's, great. DM me on there. I'm pretty active with checking those. Just my first and last name, Brock Mogensen. Like I said, just posting a lot of real estate stuff there. So feel free to message me on there. Our company website is smartassetcapital.com. I have a few kind of free ebook downloads and content there. So yeah, hit me up. Happy to chat.
Dude, I love it. Great name, Smart Asset.
It works
Brock,
out.
You're the man. Thank you for your time. This has been awesome.
Awesome. Thanks for having me on.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CohostCapitalGroup.com to learn more.